Hello, everybody. So today I want to talk about Enphase. I stopped the call halfway. I listened to all of Battery's section and some of Mandy's section and didn't quite get to the analyst questions. I'll get to this after recording this video. The point is, the way I title this video is Enphase is a company in control and winter is for building. This is a company right now that is building for the future, building for the next 10 years, and that did not surprise the market. The guidance of Battery, the guidance that Battery gave us in Q3 was just about right because indeed the revenue was way down and it had been guided way down. And if you look at the revenue was 303 million versus 551 million in Q3. In Q4, 303 million. And that was as guided, so the market is not reacting too poorly here. And if you look at what is guided again, Q1 2024 will be the bottom, so we'll have perhaps even less than that, perhaps 270, 280 million in Q1, and then Q2 will get back up to 300-ish million, and then Q3, they will be done with these inventory issues. These are not the real declining rates of the business. When you look at this chart of revenue and you see this decline, you would have a tendency to think, I'm running for the hills, right? I don't want to do any of that. No, this is a problem with inventory. Their distributors have too much stock, way too much stock. And as a result of that, Enphase has to undership. They have to undership. That's why if you look at their operating expense, it's actually through the roof this Q4. And that is because they undershipped. So they kept the capacity as much as they could, but they also greatly undershipped the product. This is the bad. This is why the stock is down still today. After the run, it's still down 71% from all-time high. So, I would go as far as to tell you that this stock is down as much as a SPAC. And it is the leading company in solar, the absolute leader in solar energy, in residential solar energy. The residential solar market is much bigger than commercial will ever be, than industrial will ever be. It's the biggest market out there. They're the leader. This company is still down 70% like it is a SPAC. And, I guess that's what you deserve. I mean, this is a deserved drop because the revenue's dropping and they didn't guide properly last year. But the whole industry got caught up last year. The whole industry got caught up in these interest rates and trusting the interest rates. So, now that the bad is out of the way, revenue growth is down, and you know how much I hate that. I really don't like that. Let's turn to the positive. The positive is that the true numbers on revenue have nothing to do with the numbers of what they're shipping to their distributors. This is the numbers they're shipping for their distributors. The sell-through, i.e. the brand, the sell-through numbers are actually much better. It's minus 9% quarter-over-quarter in the USA and minus 23% quarter-over-quarter in Europe. It is not like this. I mean, because if you look at this, almost a minus 50%. Not quite, but almost minus 50%. They're not there in reality. This is a business that will pick back up. Much of the downturn, and Battery said that, much of the downturn, and we know this, if you follow this stock, we know this, it's dictated by high interest rates, very high interest rates, and the US interest rates lead the interest rates for the world. And of course, when we had Powell on Sunday, keeping saying, we're not going to drop in March, of course, that doesn't help the stocks, but these interest rates will go down at some point. They will go down. That's the first headwind. Interest rates are high. Putting solar panels on your roof, that's $30,000. I mean, roughly, depending on if you have a big roof, it's going to be $30,000, right? It's a tough sell. People don't want to get a personal loan for that, and people don't have the cash. So that's hurting these high interest rates. But the other one is NEM 3.0, or as you could call it in other countries, the end of feed-in tariffs. And Battery was like, in the Netherlands, they had a big drop, major drop in sales in the Netherlands because of feed-in tariff uncertainty and legislation, etc. These two issues, in my view, they're going to get resolved because the interest rates are inevitably going to drop. I mean, if interest rates don't drop, we have much, much bigger issues to think about. But it's just math. It's just math. It's logical. There's no choice. The interest rates, they have no choice. The bankruptcies are just going to accelerate if the interest rates stay this high. And we know they're going to drop. Powell told us on Sunday on CBS 60 Minutes. He said they're going to drop this year. Second half of the year, interest rates are going to drop. And then the batteries. The batteries eliminate the need for NEM 3.0 or the need for feed-in tariffs. You don't need feed-in tariffs from the moment you have a battery. From the moment you have a battery, you can cut yourself of the grid and don't have to worry about that. And the cost of batteries is dropping very rapidly, and that will only continue over the next decade. Cost of batteries is dropping about 15 to 20% a year. That's how quick it's dropping. Now, if you look at the business itself, and battery does that because of both in-house and third-party data, tells them that Enphase is still in the same position in the marketplace. They are not losing share to any competitor. What's happening to Enphase right now is an issue with the market, with the solar market, with a lack of solar demand. That is not an issue from a competitor taking market share. And so this is quite important to see that as soon as interest rates drop, the whole market of solar should also recover. Let's talk about installers. So installers still need to be educated on the sale of batteries. It actually took them a while. It took Enphase a while, a decade plus, to educate its installers on the benefit of microinverters. They now have to educate the installers on the benefits of batteries and selling batteries, and it is what they are doing. But this is going to take years. Selling solar installs is a personal selling technique. As battery says, it's a sell that happens at the dinner table. So it's a tough one-on-one sell, and you need to educate the installers on selling on the need of batteries. Furthermore, batteries are going to get more and more compelling. They are working on next-generation batteries. The most recent example, the first next-gen batteries they're going to release is going to be a three-phase battery for the German market, and they will release more and more batteries coming. Internal expansion these past 12 months. So in 2023, they've expanded to all of these countries: UK, Sweden, Denmark, Switzerland, Austria, Italy, Belgium. These are not small countries, especially the UK. That's a pretty darn big place. So imagine how much they're going to sell there. These are new markets. This is a growth company. This is a highly growth company that is not international yet. It's still growing internationally. There's still markets where there's no Enphase. We also know India. India is somewhat of a new market for them. They are entering. They're selling. They started selling in India their high-powered microinverters, which is their 480-watt AC microinverter. They sell these in India, Mexico, and Brazil. I happen to believe that IQ9 and IQ10 will most likely be, close to 500 watt AC. Now, why do they have an incentive to sell very, very high watt AC microinverters? Well, the incentive is because of the IRA. You're getting paid 11 cents of subsidy per watt AC. So they have an incentive to ship as much watt AC as they can. This shift, to me, of the higher powered microinverters, I think is a shift we're going to see throughout their product line. Moving on to what else is good. Speaking of what else is good, and speaking of margins and the IRA benefit, they've achieved 50% gross margins, inclusive of subsidies. And that's going to increase more and more as they manufacture more and more stuff in the US. Now let's talk about the Net Promoter Score. 77%. That means a 77% is an outstanding Net Promoter Score anywhere. But this means that they are the most loved solar company out there. I don't know of any solar company that has a higher Net Promoter Score like that. This is nearly an Amazon-like Net Promoter Score. The vast majority of people who buy Enphase actively promote Enphase and are very, very, very happy to buy Enphase. This is a company that is very loved by its customers. The business has some growth. If you look at the electric car charger business, their sales are 7% quarter over quarter. So keep in mind, if you annualize that, that's what, 35, 36%. If you annualize that, that's a pretty high rate for their Enphase branded car chargers. That's growing, silently, but that was their Clipper Creek acquisition. Europe is already showing signs of recovery. Remember, it was down minus 22% this quarter compared to the last quarter last year. But if you look right now, they're seeing some signs of recovery in Europe. About R&D, they're working on GaN. GaN is very hot in the semi space right now, actually, and they're working on GaN-based IQ9 and IQ10s coming soon. Yes, the update from their IQ8 onto the next version is coming up soon, and that's gonna be a catalyst for their sales. Same for their batteries. 4th gen, a version of those coming to Germany, but 5th gen batteries are also coming soon. And these batteries, the more kilowatt hours you have in those batteries, the easier the cell is going to be. And they are building their energy management software. This is going to be the piece that's going to be added on once you sell a whole solar energy system. And my hope is there's going to be a subscription, and that it's going to help customers of these systems decide arbitrage between, say, selling the electricity on the roof, selling it to the grid, storing it in the battery, storing it in the electric car, or using it for, I don't know, preheating the stove, or pre-cooling the homes with AC. There's a lot of AI to be used in order to manage a home's energy efficiently, and Enphase is developing this and getting into that. And I'll conclude with this. If you look at the numbers, these are the CFO's numbers, right? So Mandy's numbers, 586 million of free cash flow for a full year 2023, and we know that was before the IRA subsidies even kicked in. Like, much of this is like net of IRA subsidies. They've had very few of them because they really started kicking in really only about 6 months ago. So they did this much. 3.3 million shares of stock bought back. So if you look at the average price, the average buyback price was 124, which is a little higher than the stock is now, but it's really, really not that bad. You have companies who do a much, much more terrible job at overpaying for their own stock. 1.7 billion of cash on the balance sheet. This is an anti-fragile company. If I look at the market cap, roughly today is $14 billion market cap. You remove the cash to get the EV. The EV is about 12.5, 12.3. Roughly, the number to remember is about a 21x. 21x free cash flow. The stock is trading at 21 times free cash flow. And the big question that you ask yourself is that expensive for a company that has at least 10 years of runway, if we take the IRA subsidy as a guide? I personally invest in this company because I see a world where down the road, most homes in most neighborhoods are going to have solar on their roofs. And if that is what happens, which is what I see happening, then in that case, this is a business that has at the very least a 10x growth runway. At the very, very least, imagine all of the equipment that needs to be installed on all of these homes. This is a business with an enormous total addressable market. And I want to talk about this briefly, but you may have heard of Bitcoin mining, and Bitcoin mining used to be the big debate. How much energy do we use for Bitcoin mining? Well, AI is going to be a major user of energy, and people are getting concerned about all of the electricity that is being used by AI. The point I'm trying to make is that those electric rates that people pay, they're going to keep increasing. They're going to increase to the highest bidder, and the highest bidder, I don't know. Is it going to be Bitcoin miners? Is it going to be these AI companies who use it to sell some very expensive software? Or is it going to be the homes? And my bet is it's not going to be the homes that are the highest bidders of energy. So the cost of electricity is poised to go up. And what happens when you have a cost of electricity? When you start having an electric bill, $4,000, $5,000, it becomes quickly very compelling to become energy independent and set up solar panels on your roof and cut yourself off the grid. And I think this effect is going to be exacerbated in the future years. And, this is not the first time we hear people say that solar is dead. I've been in solar for a while. I heard it in 2014, 2015. I heard it in 07, 08. We hear it again now, but this time it's because of interest rates. In my view, solar is not going anywhere. It is the technology of the future, and Enphase is the leading company in this space. And I'm very, very happy to own it. Have a full position. I'm happy with the position. Waiting for it to get back up. Not adding right now, but it's too bad because it's up 14% after hours. So I'm not gonna add. I had kind of wished I was holding back my buys of Enphase because I was hoping for another crash. Turns out we didn't get it. We didn't get it, but it's okay because we got Tesla crashing, so I'm happy about that. And that's kind of how I build the portfolio. The stock is up. Analysts like the stock, and I like the stock very much. Great conference call, by the way. This is a company that knows how to manage and handle conference calls. Likely better than Tesla. So anyways, this was not investment advice. This is just entertainment. I hope you were entertained. Appreciate your likes. Appreciate your subscribes. Thanks for watching and have a wonderful day.